Hello and welcome to our today's class. Today we want to look at a statement of cash flow question from Financial Reporting December 2022 question 5. The question reads, the following draft financial statements were extracted from the financial records of Maalum Limited, a public entity as at 30th April 2022 with comparatives for the year ended 30th April 2021. We start with the statement of financial position for the two periods. The statement of financial position for the two periods. So the statement reads, assets for 2022 and 2021. So assets, we have property, plant and equipment and also intangible assets. Then we have current assets from inventory to cash and cash equivalents. Then we have our total assets. Equity and liabilities is share capital and reserves, where we have ordinary share capital to retained earnings, then total equity. Non-current liabilities, the 10% loan notes and also government grants for the 2 years. Current liabilities from trade payables to government grants. Then we have total equity and liabilities. We also have the statement of profit or loss and other comprehensive income, revenue through total comprehensive income for the year. Additional information, Maalum Limited acquired some plant during the year to 30th April 2022 at a cost of 1.8 from a finance company. An arrangement was made at the date of acquisition for the liability for the plant to be settled by Maalum Limited issuing at par a 10% loan note dated 2025 to the finance company. The value by which the loan note exceeded the liability for the plant was received from the finance company in cash. The company motor vehicle haulage fleet with a cost of 2630 and accumulated depreciation of 1165,000 were disposed of during the year for cash proceeds of 1,810,000. The profit on disposal has been included in other operating expenses. Depreciation charged on property, plant and equipment during the year amounted to 5,490,000 and was included in the cost of sale. Intangible assets were amortized during the year and amortization charged to profit or loss amounted to 540,000. During the year ended 30th April 2022, Maalum Limited made a bonus issue of ordinary shares of 1 new for every 10 shares held, utilizing the share premium account. Required, a statement of cash flows for Maalum Limited for the year ended 30th April 2022 using the indirect method in accordance with IS7, the statement of cash flows. So a solution for this question, we have our title and also the statement of cash flows. Then we usually start with cash flows from operating activities. We have the two currencies. Our first note is going to be property, plant and equipment. That will be our note 1. And for property, plant and equipment as given, we want to start with the balance brought down. Balance brought down of property, plant and equipment. And our balance brought down amounted to, in 2021, 27,450. Then we also have our balance carried down. Balance carried down of property, plant and equipment, which amounted to 36,300. That is the figure given. Now remember, all these have been stated at net book value. So it's at net book value, the figures that have been given at net book value. Now, after what we've been given, we move to additional information. Before additional information, you check if there is revaluation. Remember, PP is affected by revaluation. So revaluation reserve changed from nil to 2550. That means there is a revaluation gain of 2550 from nil to 2550. And therefore, we have a revaluation gain. Revaluation gain. And that amounted to 2550 from nil to 2550. So it's 2550 as our revaluation gain. Then additional information number one, Malum Limited acquired some new plant during the year to 30th April 2022 at a cost of 18 from a finance company. An arrangement was made at the date of acquisition for the liability for the plant to be settled by Malum, issuing at par a 10% loan note dated 2025 to a finance company. The value by which the loan note exceeded the liability for the plant was to be received from the finance company in cash. So they're acquiring a motor vehicle of 1.8 by issuing a 10% loan note. That therefore means that we have 10% loan note, that is 1,800. And after that, nothing else. We move to additional information number two. The company's motor vehicle, that's a plan that was acquired through finance, a 10% loan note. The number two, a motor vehicle with a cost of this and accumulated depreciation of this was disposed at 1810. The profit on disposal has been included in other operating expenses. So what we do here is that since the PP has been reported at net book value, we also dispose using the net book value amount. That is 2630 minus 1165. So disposal of motor will be 2630 minus 1165. 2630 minus 1165. That is disposal of motor. 2630 minus 1165. So that is the disposal of motor. You don't remove it at cost because PPE has been reported as at net book value as well. Then since it is reported at net book value, then depreciation is also going to affect the property, plant and equipment. So depreciation was 5490. Depreciation here is 5490. Depreciation 5,490. That is 5,490. Then at the end of the day, we'll be having a balance carried down, which you've been given. So we have the balance carried down already. Balance this and get any acquisition. If there is any acquisition that occurred during the year, then that will be the balancing figure. So we're going to write here cash, and that becomes the balancing figure. Now the summation, alt equal, sum up, this side as well. And then the balancing figure will be equal sign, this cell, minus the 1800 minus 2550 minus 27450. And you realize that they acquired an item at 11,455. 11,455. Now just to confirm, this was the amount that was disposed, 1165 and 2630. So 1165 and 1165 and 2630. That is fine. Now the second working, which will be our note 2, that would be our note 2. Note 2 is going to be 10% loan note. So we work with 10% loan note. 10% loan note. All these to be cleared. 10% loan note. Now for the 10% loan note, the balance will be on this other side. 10% loan note. And the 10% loan note had a balance of 5250. Then you also have the balance carried down. And that amounted to 8250. So that is 8250, balance carried down. After that, you bring in the plant that was acquired. So PPE, that goes to plant. Plant acquired amounted to 2550, not 2550, but 1800. Now they said in additional information number 1 that the value by which the loan note exceeded the liability for the plant was received from the finance company in cash. So the value by which it exceeded was received in cash. So the summation of that is 8250. This will be the same as this side. Then the balancing figure was received in cash. And what was the balancing figure? That was 8250 minus 1800 minus 5250. So the 1200 was received in cash. That was received in cash. Now note 3 is disposal. Disposal of motor vehicle, the disposal of motor vehicle. You start with sales proceeds. The sales proceeds. Now sales proceeds in additional information number 2 amounted to 2630, not 2630 but 1810. So sales proceeds is 1810 less a net book value. So we have the net book value, and of course net book value is going to be made up of, so less the net book value, and then net book value is the one that we have up here, the one that has been deducted. So disposal of motor of 1465, and this will be gain on disposal. The gain on disposal will be the summation of those two, because the other one is already negative. So you simply add the two. So the gain on disposal was 345. Now from the gain on disposal, another important account will be the intangible asset. So you're also going to do the intangible asset as our next working. Intangible asset. Intangible asset. Now the balance brought down, or this is note 3, then intangible assets. Intangible asset. And we have a balance brought down of on intangible assets amounted to 6150. That is the balance brought down. We also have a balance carried down for the intangible assets, which amounted to 6750. So for the intangible asset. Then additional information number 4. Intangible assets were amortized during the year, and amortization charged to the profit or loss was 540. So amortization was 540. Amortization is 540 that way. Then of course you check if this is balancing or not. This can be taken up here. This can also be taken somewhere here. So amortization. Then once you have that, sum the two, alt equal, which is 7290. It will be the same as the other side. Then the difference is any amount of money that was paid to acquire intangible assets. And in this case, we have equal sign, 7290 minus 6150, and it's giving us 1140. So the amount that was paid to acquire some intangible assets. Now, after the intangible assets, the plan is now set to see if there is any additional information that affects cash flows from operating activities. There is none. We can now simply do cash flows from operating activities, starting with profit before tax. We are going to start with profit before tax. Profit before tax. Then adjustments. Adjustments. So under adjustments, we start with the depreciation charge. But before that, the profit before tax amounted to 8190, that is 8190. Then depreciation charge amounted to 5490. Then amortization, remember all those are non-cash expenses. Amortization amounted to amortization under intangible asset was 540. And where is amortization? It was included. Charge the profit or loss was 540. We have finance cost. Finance cost amounted to 705. So we have 705 as finance cost. Finance cost was 705. And lastly, gain on sale of motor vehicle. The gain on the sale of motor vehicle, that will be deducted. Remember, we are deducting that because it's not an operating activity. Yet it was a gain. 345 is going to be adjusted for. Now, if we look at the statement of profit or loss, the only other item that perhaps requires an adjustment will be other operating income, which are government grants. But they said that it's an operating income, so we don't adjust for that. It was an operating income, government grants. Now, this will be operating profit before working capital changes, operating profit before working capital changes. You sum everything up, giving us 14,580. 14,580. Then we have increase in inventory. Increase in inventory. Remember, it's increasing from 11 minus 13,300. That's an increase in inventory, which is an outflow. We have increase in receivables. Increase in receivables. Now, the increase in receivables amounted to equal sign 7080 minus 9230. Increase in receivables is also an outflow. Move down and find trade payable is also increasing. So that is also an increase in payable. Increase in payables will now be used as an inflow. That is equal sign 10,200 minus 7770. That is increase in inflows, giving us 2430, an outflow, an inflow. Then cash generated from operations. Cash generated from operations. Sum everything. Cash generated from operations, it's to be summed from operating profit before working capital changes. Before working capital changes. Okay, some bit of an error there. We review. Then now, cash generated from operation is supposed to be moved from operating profit before working capital changes, and you sum all the way down. So that is cash generated from operations. Now, after the cash generated from operations, we need income tax paid. Income tax paid. We also need the finance cost. Finance cost paid. Finance cost paid. So we start with the income tax paid. You can see these current liabilities, these current tax, and also deferred tax that have been given. So we draft an account for that. The income tax account, and we have deferred tax liability brought down. We also have the current tax liability brought down. Current tax liability brought down. Then the same things, the same elements or items will move here, where now they will be termed to be carried down and carried down. So the deferred tax and also current tax. Now, the deferred tax brought down amounted to 810. The deferred tax brought down is 810. Then the deferred tax carried down is 1920. Then current tax brought down, the current tax brought down is 2775. Then the current tax carried down is 2685. We have 2685 on that side. On that side. Then I'll go to the SOPL. There's an amount that was put as tax in the SOPL. So the amount of tax in the statement of profit or loss amounted to equal sign negative 2665. So you can see 2655. Then we sum up and get the total for tax. This will be the same as the other side, but now the difference will be any amount of cash that was paid as far as the taxes are concerned. Now in this case, the amount of tax paid is 62 minus 26 minus 1920, giving us 1635, the amount of income tax that was paid during the period. So that is the income tax that was paid during the period, equal sign negative, and we use 1635 as income tax that was paid. Now finance cost, since there was no tax payable, the interest payable, if there is no finance cost payable, then the one that was charged in the statement of profit or loss is the actual one that was paid during the year, the 705. So the tax or the finance cost paid during the year is simply the 705 on the other side, 705. The same one that we adjusted for up there. This will be the net cash flows from operating activities, the net cash flows from operating activities, and that will be summation, so equal sign sum tab from 13005 up to 705, close bracket and enter. 10,665 becomes the net cash flows from operating activities. Then after the net cash flows from operating activities, we want to move to the cash flows from financing, not financing, but investing activities. Cash flows from investing activities. Now we begin. Cash paid to acquire, the cash paid to acquire under the PPE account, cash paid to acquire PPE was given at 11,455. So to acquire PPE, cash paid to acquire PPE equal sign negative 11,455. That is an outflow. Then we have cash received from sale of motor. The cash received from the sale of motor vehicle, that is here, 345. So it's an inflow. Then we have cash paid to acquire, the cash paid to acquire intangible assets. Equal sign negative 1140. That was the cash paid to acquire intangible assets. Now from the cash paid to acquire intangible assets, there seem to be no any other investing activity. There is no any other investing activity. Then this will be net cash flows from investing activity. Net cash flows from investing activities, which will be summed here, sum tab. So the net cash flows from investing activities are 12,250. Now finally, cash flows from financing activities, cash flows from financing activities, cash flows from financing activity. We already have one cash flows from financing activity. Cash received from 10% loan note, cash received from the 10% loan note, and equal sign negative. 10% loan note is in note 2, that is 1,200, cash received from 10% loan note. Now check if there is any other amount. None. I want to move to government grants. We have some government grants that we must also do our working. So government grant. So government grants, we have non-current liability, that is non-current liability brought down. We also have current liability brought down. And in the same note, we also have the other part, the carried downs. We have carried down and also the other carried down on this side. Now, government grant, non-current liability brought down. Government grant is 600. Then current liability brought down. Current liability, I believe I used the current liability one, so I'll change. Non-current liability is 2,400. I've interchanged this. Then current liability is now the 600. We have the 600. Then the other side, this could move down a bit. So the brought down is 3,150. Then the carried down is the 810. So we have the 810 on the far end. So that is government grant. So we want to see how much of government grant was received again during this particular financial year. We are going to add, so that is summation. This will be the same with the other side. Total for both. We underline, then align on the correct side. Now the balancing figure will be cash that was received from government grant. Cash received from government grant equal sign, that 960 minus 600 minus 2,400. That gives us 960. So that is the cash received from government grant. So this is receipts from government grants. The receipts from government grants will be equal sign 960. That becomes the receipt from government grant. Now the other one, the 10% loan note is also an inflow because it's cash received from 10% loan note. This one should be an inflow, cash received from 10% loan note. Now after that we move to the issue of shares. We want to run something about issue of shares. That was done in additional information number 5. During the year ended 30th April 2022, Malum Limited made a bonus of ordinary shares of 1 new for every 10 shares held utilizing the share premium. So 1 for every 10 shares held. So that will be not about ordinary share capital. It will be a bonus issue. Bonus issue, that should be not 7. about the bonus issue. So number of shares outstanding, will be equal sign, the number of shares outstanding will be equal sign, the total ordinary shares at the beginning of 6,000, then divide by, so this is 6,000 divided by the par value of 10. So divide with the 10, as you can see in the formula bar. Then the number of shares outstanding are 600. So we have 600. A bonus issue was 1 for 10. 1 for 10. Now what that means, 1 for 10, is that you simply take 600, then divide that with 10, and you realize that this is 60 shares. The bonus issue was 60 shares. Then after getting the 60 shares, what is the amount? Remember, the amount is just 10. So the value for bonus issue will be the 60 shares times shillings 10 times shillings 10. So that will be equal sign 60 times 10, and 60 times 10 is giving us 600. So the amount of bonus issue is simply 600. Now from 600, we draw the ordinary share account. So we now move to the ordinary share capital account. Now the ordinary share capital account, where we have a balance brought down of ordinary share capital is 6,000. That is the balance brought down of 6,000. Then we have a balance carried down of ordinary share capital. Balance carried down amounted to 7,500. So 7,500, that becomes the balance carried down of 7,500. Now we sum to get the total, which will be the same with this side, but before that, there is bonus issue, which amounted to 600. Bonus issue amounted to 600. Then, what now is the cash received from the issue of shares? The difference will be the cash received from issue of shares. Cash received from the issue of shares. 75 minus 6 minus 6,000, we get our 900 from the cash received on the issue of shares. We do a share premium, not 8. We'll be doing a share premium. The balance brought down on share premium is 1050. Then the balance carried down on share premium is 1350. Remember, we have bonus. It was financed using the share premium. So bonus issue was financed using the share premium, and that amounted to 600. Sum this up. This will be the same with the other side to be, of course, balanced. Then the difference will be cash received from, again, another issue of shares. So the cash received from the issue of shares will be equal sign 1950 minus 1050, and that still is 900. So that will give us the total from the issue of shares, 900, total from the issue of shares. Now remember, bonus issue was financed from the share premium. So proceeds from issue of shares, 600, or 900, 900 plus 900, That forms 1800. That is our 1800 proceeds from the issue of shares. Now, finally, will be the retained earnings account to test if there was any dividend that was paid or not. So lastly, we have the retained earnings account. The retained earnings account. So retained earnings account in note 9, retained earnings account. Retained earnings account. So we have the retained earnings account unless something has been left out. None. So retained earnings account. Retained earnings account. So balance brought down on retained earnings. Balance brought down on retained earnings is 25,980. 25,980. But the balance carried down on retained earnings is 28,065. 28,065. Then profit for the year. Profit for the year, the one from the statement of profit or loss, amounted to, so profit after tax. Profit after tax, 5535. That is 5535, profit after tax. Now this will be balanced. Alt equal to get the summation, which will be the same as that on the other side. The balance will be cash dividend paid, or simply put, any amount of dividend that was paid. Dividend that was paid. That will be the balancing figure for our question. Now, dividend paid is equal sign 31,515 minus 28,065, and it amounted to 3540 as the amount of dividend that was paid. So dividend paid, and dividend paid amounted to 3450. Dividend paid was 3450. At the end, we have net cash flows. From the net cash flows from financing activities, the net cash flows from financing activities, equal sign sum tab. When you are summing all this, the net cash flows from financing activities, and 510 becomes the net cash flows from financing activities. Unless there is an amount that has been left, anything that has been left out, that is all on cash flows from financing activities. Net cash and cash equivalents. Net cash and cash equivalents for the year. Net cash and cash equivalents for the year. That would be the cash flows from operating plus cash flows from investing plus the cash flows from the financing activities. So cash flows from investing plus cash flows from operating and cash flows from financing activities. Add cash and cash equivalents, cash and cash equivalents, cash and cash equivalents brought down. So the cash and cash equivalents brought down, cash and cash equivalents brought down amounted to 510. So cash and cash equivalents are brought down amounted to 510. 510. 510. Cash and cash equivalents brought down is 510. Now add cash and cash equivalents brought down, then the final answer will be cash and cash equivalents, the cash and cash equivalents carried down, which has also been given. So the cash and cash equivalents carried down was given at 900. So cash and cash equivalents carried down was 900. And this becomes the end of the question, the end of the question. But you can see that this plus the other one is bringing 565. So the answer is not 900. It means that there must be some error somewhere that we have committed. So moving up, you can quickly see that let's say cash flows from operating, that one is okay. Then cash flows from investing, cash paid to acquire PPE, that was 11,455, that is fine. Then cash received from the sale of motor. Now cash received from the sale of motor was not 345. The cash received from the sale of motor was 1810. So this one was wrongly placed. Cash received from the sale of motor vehicle, cash received from the sale of motor vehicle is equal sign, then 1810, not 345. So that corrects that. It's 1810. Move down and now at 390 plus 510, that will be 900. So now this is 390 and not as it was placed earlier. Now you can also decide to put this here so that we do away with the last column. This can just be on this column. This can also just be placed here. Remember, we've changed 1810 from 345 to 1810, cash received from the sale of motor. Then all these can also be cut and placed on this other side. So this is 510, 390, 510, and finally 300 as our final answer. As our final answer as cash flows, or cash and cash equivalents carried down. You can clearly see from where we've moved. That is cash flows from operating activities with the adjustments, net cash flows from operating, cash flows from investing, those are cash flows from investing, then finally cash flows from financing activities, of course alongside our workings that have been useful in getting the question. That is the statement of cash flows, financial reporting from December 2022, question 25. See question 5. See you in our next class.